Many of you asked me to do a video on AT&T stock, ticker symbol T. The stock is sitting at its 1994 kind of levels. There's a lot of bad sentiment around it. This is excluding dividends, of course. With dividends, maybe it's around its, actually they have something to look for, adjusted for dividends, which is pretty interesting. So adjusted for dividends, AT&T is sitting around its 2014 or 2015 kind of levels, which is still a historic low levels. And many of you maybe want to own AT&T for the dividend. It's pretty close to 8%. And maybe you could also get some price appreciation along the way, because the sentiment is very, very bad with AT&T. And some kind of a good news or some kind of change in sentiment could be very powerful for AT&T and Verizon. I did do a few videos on Verizon, but this is my first video on AT&T. And this is the first time I actually review those earnings. I haven't reviewed them in a year or two pretty much, and I was actually very impressed on a lot of the metrics that AT&T is putting. They're putting a lot of improvements in postpaid phone subscribers. AT&T fiber is growing nicely. A lot of the other metrics are growing well. You can go and look it up yourself, so I don't waste your time in the video. But free cash flow is improving, revenue is improving. Cash from operation, it was 7.7, now it's 9.9. So free cash flow or cash from operation is also improving. Everything is improving pretty much with AT&T to the right direction. But there's so much bad sentiment around this company, and I do understand why. One of the reasons is with the cable lead kind of thing, which a lot of people are actually talking about, some kind of a cable leads that they're going to have to remove them because of some toxic cables of litigation or something crazy. But no one knows how much this is going to cost them. There are estimates that it could be around $20 billion, but then there's some kind of analysts that they say around 264 million to 1.2 billion, and it could take up to 15 to 25 years to even remove them. So no one even knows how this is going to play out, if it's 1 or 2 billion or if it's 20 or 30 billion. But this is one of the reasons there's so much bad sentiment around AT&T. Now, I know I'm going to get people in the comments saying that AT&T is in a dying industry. Well, we all know that. No one is buying AT&T to double or triple their money. I think that would be a very high expectation that will likely not materialize. Most people that want to buy AT&T, they like the dividend. Maybe they can take the dividend and sell covered calls on it and collect pretty much a double yield like I do with a lot of other companies. I don't own AT&T, but this is one way to do it. And you could potentially get some price appreciation with AT&T, but a lot of their metrics are actually improving. And I said the dividend is sitting pretty close to 8%, one of its highest ever after a dividend cut. Now, the biggest problem with AT&T, which is the same problem with Verizon, is actually the long-term debt. The long-term debt is now around $133 billion. This is a lot of debt for the company, but it's been coming down. It was around $167 billion in 2018. It was $149.5 billion in 2021. And at the end of 2022, it was somewhere around $132 billion, which is actually, a lot of debt for something like AT&T. And if you look at the interest expense, it's massive, although it's been declining a little bit because the company has been paying down the debt. But the interest expense is around $6.1 billion every single year. I mean, just think about it. $6 billion every single year in just interest. I mean, can you imagine how much value creation could happen if AT&T starts paying down this debt and this debt actually decline? Can you imagine how much free cash flow is going to increase and how much more they can potentially raise the dividend or maybe do share repurchases and a lot of other things, which is why I believe AT&T made the right move in cutting the dividend, and now they can actually have more room to pay down the debt, which is something, pretty good that they actually did. I know the company sold off on the news and a lot of dividend investors were mad, but at the end of the day, this was the right decision in my opinion for AT&T. Now, if we look at AT&T's, free cash flow, the free cash flow for AT&T right now is around 17.6 billion and is expected to stabilize between 17 to 18 billion for the foreseeable future. But the free cash flow right now is 17.6 billion, which is expected for 2023. Now, if we look at the dividend that AT&T is actually paying is paying pretty close to $10 billion of dividends. So they're paying out $10 billion, they collect free cash flow around $17.5 billion. This would leave them around $7.5 billion of every single year to pretty much use to pay back the debt or do some share repurchases. But I believe AT&T would be doing the right thing if they actually go and start paying down the debt. So it's around $7.5 billion extra they can use, which is a pretty good thing to do. And if you look at their maturities on the debt, it's around $7 billion due in 2023, 9 in 2024, 6 in 2025, 8 in 2026. But most of the debt, over $110 billion of the debt, is due after 2027. So if you're trying to enter AT&T for some short-term dividends or try to flip it around whenever the sentiment change and the market realize the value, I believe the dividend is safe for now, and the debt is most likely safe in the short term, because they're gonna have around $7 to $7.5 billion of extra free cash flow to cover the debt repayment and reduce the interest expense on AT&T, which is actually not bad at all. That's why I was impressed with AT&T, because the free cash flow is improving, a lot of the metrics are improving, the dividend is well covered, and the debt in the short term, in my opinion, is well covered. I know a lot of people are talking about another dividend cut. I personally not seeing another dividend cut, although it's possible if maybe whatever they're trying to say with this lead cables, which no one knows how much it could cost. I mean, if it costs them 50 or 60 billion, then of course AT&T is gonna go and cut the dividend. But if it's something like $1 billion or $2 or $3 or $4 billion, I'm not personally seeing a dividend cut with AT&T, and I believe the debt is manageable in the short term, and I hope they continue paying down the debt, which is gonna create a lot of value for shareholders, and it's going to create more certainty with the investment, and it's just going to be it's going to get a multiple expansion, in my opinion, if it starts consistently paying down the debt and consistently paying out those dividends. And if you look at where AT&T is trading at, it's trading around 5.5 times free cash flow. This is market cap. We should be using enterprise value. Enterprise value could be around 15 times, but I don't have it in ticker. I just have the market cap to free cash flow on a forward basis. But the market cap to free cash flow is around 5.5 times, which is one of its lowest since 2010. I mean, it's never traded this low, so it's trading at a historical low multiple with a pretty good dividend, in my opinion, of pretty close to 8%. The dividend yield is covered, the debt is covered in the short term if they continue paying it. I mean, in my opinion, the way I look at AT&T, I see a lot of things, a lot more things that could go right than a lot of things that could go wrong. I just see more positive than negative, especially with the way free cash flow and a lot of their metrics are improving, and with the extreme bad sentiment around AT&T. I mean, the sentiment could not be worse around this company. And normally, whenever you have such bad sentiment, I mean, any kind of improvement, any kind of positive news with something like AT&T could cause a massive change in sentiment to the opposite direction. It could cause people to start FOMOing into AT&T, just like what happened before with many other stocks that had very bad sentiment. So the way I look at it, I see a lot more good things that could potentially happen than bad things. I think the dividend is safe. I think the short-term debt, is safe. So I think AT&T is actually not bad at such prices if you're more of an income-oriented investor, or if you're a deep value guy that's looking for a multiple expansion or a change in sentiment. I think AT&T is not bad at all if they continue on whatever they're doing with debt repayments and focusing more on free cash flow and selling some assets like they've been doing. So I like AT&T here. I think it's not bad at all, but no financial advice, of course. Thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.